Greetings from 3Edge Asset Management. My name is Fritz Folts, and I am the Chief Investment Strategist here at 3Edge. I'm pleased to be joined here today by Steve Cucchiaro, President and Chief Investment Officer at 3Edge Asset Management. Today is Saturday, May 16th, and as Steve and I have done each week during the COVID-19 crisis, we'll provide a brief recap of the past week in the global capital markets, and then we'll take a look at a particular topic that we believe might help investors better understand the current environment in the global capital markets. As a reminder, all of our videos are available on our YouTube channel, and please feel free to share these videos with anyone who you think might be interested. So let's get started. In terms of what happened last week, as states across the country began efforts to reopen their economies, all three of the major U.S. equity indices declined slightly for the week. The S&P, for example, was down approximately 2.3%. Last week, we also heard from Fed Chair Jay Powell, who said that the path ahead is highly uncertain and that there is significant downside risk to the economy. And Powell indicated that the U.S. economy was in need of additional fiscal stimulus, i.e. government spending stimulus. On Thursday, the jobless claims report indicated another 3 million more Americans filed for unemployment for the week. So now I want to bring Steve into the conversation. And Steve, I think it's clear that there is clearly a gap between those people who are looking for the best case scenario and those investors who are considering what would be the worst case scenario as the COVID-19 global pandemic plays out. So I thought it'd be a good idea to spend some time on how, particularly in this environment, which is so uncertain, it can be more important than ever to be diversified beyond just holding stocks and bonds. And I actually think I have a slide that could be helpful here. And what the slide illustrates is it looks at the different market cycles and then it considers what asset classes might provide the most appropriate hedge depending on where you are in the market cycle. So let's take a look at this slide. And Steve, why don't you walk us through it?
Okay, Fritz, and I have to agree with you that the future is always uncertain, but today it's unusually uncertain. So in normal times, we know that diversification is typically stocks and bonds. When the economy is growing, stocks have done well typically. When the economy falls, bonds have done well. But now we're in a period where bond yields are at all-time historic lows, and bonds may not provide the best hedge, and certainly when we consider all the different scenarios that are in front of us today. So we need to look at other hedges. So if we think about some of the best case scenarios, of course, stocks will still play a very important role in a portfolio if these best case scenarios come true. Right now, in the best case scenarios, people look at how deaths per day from the coronavirus has peaked some weeks ago. And while we still have deaths climbing, they're climbing at a slower rate. The country now is opening up, and there's a lot of hope that we've seen the worst and things will improve from here. Tremendous reaction from all the government support, the literally trillions of dollars worth of credit and grants and loans that the government has been giving. And there's a lot more optimism now around all the efforts at medical technology. There are 100 programs trying to create a vaccine. And there are other efforts to try to create treatments that, when combined, might produce some favorable effects. So all of this has led into the stock market coming off the low and climbing very sharply in the last few weeks. So stocks play a role. Best case scenario is certainly possible. And we think that all investors should have some portion of their portfolio in equities. Having said that, there are many other scenarios that have been discussed, and these are less favorable. One is that all this hope has been built in the market because the country is finally opening up. But what if we then have a reality that says, despite the fact that stores are opening, businesses are opening, consumers aren't ready to go back to normal, they stay cautious. That would mean that unemployment might remain high. And even if it comes down, it might not come down anywhere near the levels we had previously. While the government support has been nothing short of phenomenal, what the government is doing is it's providing a bridge that doesn't last forever, but until the economy recovers, hopefully in a 2-month period. But let's say the economy doesn't recover that quickly, then either that bridge ends in a dead end, or we need yet even more debt, more stimulus. And then finally, there's concern that the trade war is heating up again between the US and China. So all these things throw a wrench in the works of the best case scenario. So if we think about increasing geopolitical uncertainty, we think about all the money that's being printed in the US and elsewhere. These are conditions that call into question the value of paper money when all this money is being printed just to try to keep the economy from plunging even further. And if we don't get into a recovery very quickly, we might need even more and more money printing. The debt is exploding. These are conditions that are often very favorable for hard assets, particularly gold. And we know that gold has been the best performer of all the major categories this year. And this can continue to play a role. Geopolitical uncertainty favors gold. And if all of this money printing ends up monetizing the debt, that could cause the next wave of inflation that we haven't had in many, many years. So we think hard assets need to be part of the total portfolio picture. And then finally, we have a situation where the stock market, having had a tremendous plunge and then a tremendous rebound, is now vulnerable to another downturn if the economy doesn't recover as quickly as people hope. And we've talked about our template for a typical bear market. You have an initial plunge, phase one. You have phase two, which is a relief rally based on the hope of the economy coming back. And now what if the reality is that the economy doesn't come back nearly strong enough? The medical achievements are somewhere off in the future. And the market's still quite highly valued. We could have another downturn. So in that event, one should consider having cash or cash equivalent in their portfolio, not because cash earns a high rate of return, but because it gives you optionality. It allows you to have dry powder to invest when prices are yet lower. And also, it doesn't come with the risk of bonds. If interest rates should climb, or if inflation should climb, then you don't have the duration risk that you would with bonds. So we would add to a stock and bond portfolio an important allocation to hard assets, and also to have some very short duration, very safe cash for that optionality.
Excellent. That is really a great explanation. And I think it's particularly apropos since the path forward is so uncertain during this global pandemic.
One other thing, Fritz, is that, that another way to summarize what I just said was that if an investor is overconfident, gambling on one of these scenarios happening, then there's a danger that investor concentrates too much of their portfolio in any one asset class. And we think the future is uncertain enough that that's a dangerous way to go, and that it's better to be diversified across all these classes.
Totally agree. And when I hear that, I think about how sometimes I describe what we do as providing a four-wheel drive portfolio, a portfolio that can take you through whatever market cycle you may face. And to do a four-wheel drive portfolio, you need to have that multi-asset approach, diversified well beyond just stocks and bonds. So thank you for that. I think it was very timely for you to take us through that chart. Appreciate your comments. So that will do it for us. Steve and I will be back next weekend with another edition of our 3 Edge Weekend Update. Remember, all of our videos are available on our YouTube channel. Please feel free to share these videos with anyone who you think might be interested. So on behalf of Steve and everyone at 3 Edge Asset Management, we urge everyone to do everything possible to remain safe, to stay strong, and to keep the faith. Thanks for listening.